check. आणि checkmate.
Really? Hey folks, here Rachana Ranade here, and I welcome you all to another interesting lecture, which is on how to pick your investment strategy. Now, whenever I use the word strategy, many people actually get confused as to what is the exact difference between a goal and a strategy. So, in simple words, if you were to understand, let's say this is my goal, it's like a manzil, that's like my destination, right? But what is a strategy? Strategy is something, is how I decide to reach this goal. So, strategy tells me how to move through all the hurdles in the most effective way to reach my goal. So, do we have a strategy only for investment purpose? No, we can have a strategy at in any walk of our life. So, for example, if I were to choose my career, for that I have a strategy. Kids may have a strategy to how to study and how to score more in exams. People can have a strategy to win different games, right? So, similarly, we can have a strategy for our investment purpose as well. But if I'm talking about an investment strategy, is there any law behind it? No. It's just a guide of how you can choose your investment strategy. So, what can be the different parameters based on which I choose my strategy? There can be multiple parameters. Like what? It can be like my risk appetite. So, depending on my risk appetite, my investment strategy will change, right? It can also depend on your goals. So, whether it's a short term goal, whether it's a medium term goal, depends on that. Depends on all these points what my investment strategy can be. It can also depend on your time horizon, whether it's a long time horizon, short term horizon, what. So there are multiple parameters in short based on which you will choose your investment strategy. One more very important point is that your investment strategy can be different than my investment strategy. One more important point is that your investment strategies can depend on your goals. Means what? Assume that you have goals like your child's education, your child's marriage, buy a car or buy a house. For all these, I can have multiple strategies. So there's no rule that your investment strategy has to be one for all your goals. No, it can depend. But before I choose my investment strategy, I have to do a KYC, KYS. I just said KYS and not KYC. By the way, what is KYC? KYC is know your customer or know your client. But that is done by businesses to understand their client. I personally believe that first it should be KYS, know yourself. Who are you? If you understand who you are, based on who you are, your investment strategy can be decided. But based on what parameters? So, first of all, you have to understand age. Okay, so if my age is whatever, okay, I'm younger, then I have a better risk taking capacity, right? So my strategy can be comparatively higher risk strategy. If I were 60 years of age, my income earning from that point of time can comparatively reduce. Active income can reduce. In that case, my risk taking capacity will be comparatively less. My strategy will change accordingly. So if you are at a younger age, your investment strategy can be a bit aggressive. That's just one parameter though. Second parameter can be your time horizon. If I have to choose for a long term goal, okay, my time horizon is high. For example, my child's marriage. Ideally, he will marry, is what I believe. But, anyways, let's say it's a 20-year time horizon from date. In that case, do you feel that I can take a better exposure for equity as compared to debt? Yes, definitely. Because equities can be a good long term investment rather than a short term investment. So, depends on the time horizon as well. Any other point? Yes, it's number of dependents. So, for me, who all are dependent on me? Right now, only my child is dependent on me. But if I had a lot of dependents, something like घर में बूढ़े माँ बाप है, कम्मों की शादी, all that, right? In that case, my risk taking capacity would have been lower. Because I have only one dependent on me right now, I can take a higher risk. I can choose my investment strategy accordingly. Number 4 point can be, how is my income? My income is fixed or my income is unstable. If my income is fixed, okay, if my income is fixed, which is not, but it's okay, if it is fixed, then I have a higher risk taking capacity. But for me, even if I don't have a fixed income, I know that there is some XYZ benchmark and I do have kind of a higher risk taking capacity, right? So it depends on your income as well. And the last one is your risk profile. How is your risk profile? For me, I have done my risk profiling and my risk taking capacity is above average. So based on all these parameters, I know who I am. I have done a KYS, and that's how I'll choose my own investment strategy. Well, I have done this exercise of KYS. I know myself and I know that I'm a stockaholic. If you are, then you can also check out my collection by clicking this I button. So, in the previous part, I talked about risk profiling. Typically, there are three types of risk profiles: one is a conservative, one is a moderate, and one is an aggressive risk profile. Okay, so you have to understand, you have to choose your own risk profile based on these three categories. Now, we move on one step further, wherein we say that there is a connection between risk and returns. So, always remember, higher the risk, higher the potential returns. And for that, we typically talk about a risk return trade off. What does this mean? If you are going for a lower risk, your potential return is lower. Simple example can be investment in FDs. But as you climb up this risk return trade off, highest point where you have highest possible returns. Simple example, you are investing in small caps, possibility of you getting higher returns is more. And with this base understanding, now let's move on to different strategies, different investment strategies that you as an investor can choose. Well, there are many investment strategies, but today we are going to focus on top 5 investing strategies. The very first one that we are going to discuss today is the value investing strategy. Now, what's this value investing strategy? You invest in stocks which are currently undervalued. In simple words, their current value, we call it as an intrinsic value, is lower than their market price, than their current market price. Okay, so instead of you understanding this, I'll give you a very simple example for this. This is a comment that I had received on my Pro Investor Special Fundamental Analysis video. The comment says that, ma'am, you charged us $399, but the knowledge that we got was of $39,999. So price paid by the investor was $399, but the value that he got was $39,999. Now you can just imagine that if this had happened with a stock, then what? He or she, an investor, could have paid $399, would have gotten a value of $39,999. Would this have been instantaneous? No. This will happen over a period of time. So, will you have to buy and wait patiently? Answer is yes. So, this goes as a buy right, sit tight strategy. Okay, so I hope you have understood what is the focus in value investing. Focus is to actually try and find stocks which are currently available at a discount to the current market price. But do you think that process is very easy? No, you have to actually do a lot of fundamental analysis. You will have to check the valuations of these stocks. But if you don't know how to do the valuations, we do have a course on value investing wherein I've taught how to actually value the stocks based on PE, PB, EV, EBITDA, many more, right? So coming back to the discussion, if you want to know how I pick stocks, do let me know in the comment section. I can make a separate video on that as well. So as of now, I hope you have understood what is value investing strategy. The major focus in the portfolio, almost 80% should go to value investing. Balance 10-20% can go for debt portion. The second strategy is growth investing strategy. Now, what do we mean by that? You invest in stocks which are having a very high growth. The growth in terms of what? Growth for a company can be in terms of its top line, which is revenue, can be in terms of its profitability, its bottom line, or if you're talking about growth of a YouTuber, it can be based on the subscriber count, right? So you invest based on growth. But how can I decide that whether it's really high growth or not? So you can compare it with its peers, its competitors, or you can compare it with the industry average, right? So if I'm talking about a company which has a little bit high market price as compared to its intrinsic value, but it has a fantastic growth rate, can I still go and buy that stock? Answer is yes. Means what? If I'm talking about growth investing strategy, the focus is not on comparing market price versus intrinsic value, but the focus is on whether the stock is giving a very good growth or not. So if you are an investor in this strategy, then what is your focus? Your focus should be, your portfolio focus should be on high growth stocks, should be on mutual funds which are investing in high growth stocks, or a minor portion of that, not or, and a minor portion of your portfolio should go for debt. Well, I hope you have understood what is value investing and what is growth investing. But let's take a very different, very nice example to understand the exact difference between these two. Okay. So I know this is a train, but assume that it's an investment opportunity. Okay. So, like the train is on the platform right now. If you're an investor, you go inside the train, have a comfortable seat, and you sit through the entire journey of the train. It's like value investing. You are understanding the potential of that stock before it has kicked off. You enter it at the right time, and you sit through it through the entire journey. Buy right, sit tight through the entire journey. But if this had been a growth investing strategy, you don't buy into that train ticket until and unless it has started its journey, until and unless it has proven its growth. Okay, so once the train starts with a good speed, that's where you will jump inside it, and then you will ride the balance journey. The next investment strategy is income strategy. Means what? You invest in investment avenues which give you a steady stream of income. So this steady stream of income can include dividend income, interest income, and whatnot. So how do you get this? Possibility number one: invest in stocks which can give you steady dividend, or you can invest in REITs which can also give you steady dividend. Possibility number two: you invest in bonds or debentures which give you steady interest. Who will be interested in such an investment strategy? It will be generally retirees whose active source of income has vanished. The next investment strategy is conservative investing. There are some people who say that, Rachana, if I invest or if I put 100 rupees in stock market, I don't want like 100 or 200 ho jaye, but at least my 100 should be safe. That's more or less like a conservative strategy. These people are generally people who have a low to moderate risk taking capacity. Where do these guys invest? Should they be investing in small caps, mid caps? No, they should be investing in large caps, blue chip companies. So for them, a typical investing portfolio can look something like this, where a major chunk, almost 70 to 80%, can go in fixed income securities like debentures, like bonds, and a minor portion, 10 to 20%, can go in equities, but again, as I mentioned, in blue chip stocks. The last investing strategy for today is aggressive investing strategy. It's exactly the opposite of the previous one, which was a conservative investing strategy. Who will go ahead with this strategy? Those who are high risk takers. So where can they invest? Can they invest in small caps? Yes. In mid caps? Yes. Can they also invest in commodities or collectibles for that matter? Yes. So if you have heard about the latest fad, latest fashion in collectibles, which is NFT, if you don't know about it, it's okay. We can discuss about that in some other videos of mine. But as of now, I hope you have understood what could be this investing strategy. A typical portfolio mix of such person can be like 70 to 80% can go in equities, small caps, mid caps. 10 to 20% can go in something like debentures or bonds, but I can also say a small percentage of that can go even in very high risk assets, like as I mentioned, collectibles, or can also go for cryptos. Well, I hope you have understood all the different investment strategies that we discussed today. I hope you enjoyed our first masterclass on the various types of investment strategies. If you want to check out, is there any website which talks about not only these 5 investment strategies but many more investment strategies? That's the solution for you. It's Small Case. What you have to do is just visit smallcase.com, hit discover small cases. In that, choose all small cases. So whenever you scroll down a little bit, that's where you'll get all the investment strategies. That's a complete list of investment strategies. So for example, we discussed value, we discussed growth, dividend is nothing but income. They have many more investment strategies. Plus, what you can do is you can also select how much amount you're okay investing it with. Plus, you can also choose how much volatility you are okay with. By the way, this volatility is nothing but volatility as compared to Nifty 50. So I'm giving you an example. Assume that you want to choose growth as an option. Plus, you wish to say that, okay, I'm good with medium kind of volatility. Then all these are the different small cases that you get an access to. Here the minimum amount which you will have to invest is also mentioned, plus whatever is the CAGR, that's the compounded annual growth rate, that will also be mentioned. So you can choose from a bunch of investment strategies from Small Case. So if you want to check out all these, link is there in the description box. Also, if you want to open an account with Zerodha, link is also there in the description box. Well, I hope you have enjoyed this video on different investing strategies. If you have, don't forget to share this video with your friends. Till then, take care. Jai Hind and bye-bye.